Macy's has cut its full-year forecast, blaming tighter consumer budgets and a glut of inventory that's leading to bigger markdowns. But shares, well, they're higher today after the retailer's second quarter earnings beat estimates. Joining us now is Bloomberg Markets The Close co-anchor Caroline Hyde. Earlier today, she spoke with Macy's chairman and CEO Jeff Gennette. Caroline, thank you as always for joining us. What's really striking to me here is the retail story when it comes to the consumer disparity. You have this massive kind of wealth gap, this income disparity, higher inflation hitting lower income households. Is Macy's worried about any of that?
He spoke to that. Indeed, he was saying, actually, the consumer is perhaps stronger than you might think. He did think about the headwinds that are affecting perhaps the Macy's purchaser. I'll get onto luxury in a minute, but let's talk about how he really did see the consumer actually still in a healthy place. He said about the headwinds, look, they're worrying, of course, about the pressures, whether it be gas prices, food prices, and indeed wages. He says the rate is not keeping up with the pace of inflation. Nevertheless, we are seeing this sort of disparity between the consumer that is perhaps purchasing at Macy's, still wanting to come in, still wanting to spend, but certainly that's why they are lowering their full year guidance, whether it be for profit, whether it be for sales, why they are seeing inventory back up as well, and only up 7%, I have to say, compared to its rivals, not much, but he spoke more about the industry-wide inventory that means that they're going to have to be cutting their overall prices to shift some of those athleisure or those home goods that everyone stocked up to in the pandemic era. But let's get on to your other point here, though, because the luxury buyer is still strong. And in fact, this took me really by surprise as we think about perhaps those with earning more than $250,000, not yet affected by the pullback in the stock prices. That's where he'd spoken to the previous quarter. Crete was the worry about maybe your stock prices falling, your 401k getting hit. He says, look, Bloomingdale's, the luxury customer, is quite strong.
You know, and this is fascinating as, of course, we talk about that spending ability and if or maybe when that is going to fade ahead of the holiday season. Bloomberg's Caroline Hyde talking to us all things Macy. We thank you so much. Let's get a little bit more insight on the retail giant and the state of the retail sector and bring in Dana Telsey of Telsey Advisory Group CEO. She has a market perform rating on Macy's with a price target of $28 a share. Dana, thank you as always for joining us. Let's start with the Macy's story here. They had a warning that was pretty similar to the likes of Walmart, of Target even. Of course, we know Macy's caters to a little bit of a higher end consumer relative to Walmart or Target. But I'm curious about your thoughts on the earnings story today.
I think the earnings story of Macy's and the lowered guide was already baked in and very well expected. We've now been going, this is the third week of earnings season that's been going on. And overall, the downdraft in consumer stock prices year to date in 2022 has baked in the expectations of moderation. What Jeff Gennette spoke about today with the bifurcation with the lower end and higher end income consumer, we've been seeing that from everyone. And I thought what was really poignant is the fact that they saw an increase of nearly 1% in the first half of the quarter. It slowed down in the second half of the quarter of down 4%. So those inventory levels of up 7%, as was mentioned earlier, is frankly a lower number than expected. And with the headwinds of Walmart, Target, Old Navy, and many others promoting, it's going to lead to the back half of the year being, can you keep your inventory levels clean, and how are you managing margins?
So Dana, that's what's confusing me a little bit on the inventory story. Of course, we know the higher the inventory in the retail sector, that hasn't historically been a positive thing. Then Q 2020 and 2021, arguably 2022 as well, with supply chain disruptions. Isn't that a benefit to have some sort of inventory buildup, especially ahead of the holiday season at a time when a lot of people can't get their hands on a lot of these goods?
I think one of the things that's happened, as you mentioned, with supply chain disruption, goods that were ordered maybe last year at some points are coming in at inopportune times. Whatever season they were meant for, they're not coming in at that season. And therefore, the longer they stay on the shelves, it doesn't increase in price with age unless it's a basic assortment. So therefore, we're having more goods. You're having more goods go to the off-pricers. You're having a real differentiation between essentials and fashion, and especially for occasion wear. That's what the consumer wants today, and they're shopping selectively for it.
Well, it brings me to the question of what do you do in that scenario? Does that just mean things hit the clearance racks more? Does that mean that there has to be perhaps a little bit more of an orientation towards things like fast fashion, for example? What does that mean in terms of the active operations of some of these retail companies?
I think what these companies are doing is they're looking to manage the markdowns. They're looking to promote in order to show clean inventory levels. So there'll be more promotions, there'll be more markdowns, there'll be more goods available for off price. And as we get to the holiday season, let's see what the inflation numbers look like. Let's see what gas and food prices look like. Could we see a stabilization at the mid-tier? Right now, that mid-tier consumer, the wage gains aren't keeping pace with inflation, and we're going to need to see a stabilization in retail sales. The National Retail Federation is still looking for 6 to 8% growth this year in retail sales gains, but the upcoming holiday season is not expected to show as big an increase in 2022 as it did in 2021.